The Australian property market has just hit a massive milestone. The average dwelling price has officially crossed $1 million for the first time in history. But here is the thing. If you don't know where to look, there are still incredible opportunities to build wealth through property investing in 2025. I'm going to show you today exactly where the smart money is going, and some of these locations might actually surprise you. And we are going to go down the suburb level details. So stay with me because I've got the latest data from August 2025. And what I'm going to share could change your investment strategy completely. Hi, I'm Moxin Reza. Welcome back to my channel. I'm a property mentor, and over years, I've built multi-million-dollar property portfolio for myself and for my clients, and I've helped my clients with developments that have delivered seven-figure returns. This channel is all about helping everyday Australians build wealth through smart property investment strategies. Now, 2025 has been an absolutely wild year for Australian property investors. We have seen something that hasn't happened in the last 4 years. All capital cities experiencing house prices growth at the same time. The Reserve Bank has started cutting the rates, the buyer's confidence is back, and the rental yields are sitting at roughly around 4% nationally. While everyone is focusing on Sydney and Melbourne, some of the best opportunities are still happening in places you might least expect. I'm talking about yields up to 7.8%, capital growth forecast of over 14%, and median prices that won't retire you to sell your kidney. By the end of this video, I'm going to break down exactly where to buy investment properties in Australia right now using the latest August 2025 data. So let's start with the rental yields. Tasmania is absolutely smashing right now. We are talking about an average rental yield of 6.6% across all dwellings. But here is where it gets really, really interesting. Units in Tasmania are delivering up to 7.8% yields. That's nearly double than what you would get in Sydney. If you bought a unit in Devonport for $400,000, which is around the median price, you'd be looking at $31,000 a year in rental income. That's $2,600 a month, helping you pay down your mortgage. Now, I know what you're thinking. Hey, it's Tassie. Who wants to buy in Tassie? Yes, it's a very small market, and yes, it can be very volatile because it's tied to resource sector, but the numbers don't lie. With major infrastructure projects coming online and government spending massively to build the pipeline for building and a lot of interstate migration coming through, this could be a gold mine for investors who get in early. Moving down the list, we are looking at Hobart, which is still sitting pretty at 4.4% yield. Now, the beauty of Hobart is you get decent yield, plus you get capital growth, and it's not just the yield play. Perth rounds my list of top 3 at 4.3% overall. But again, it's the units that are real winners at 5.4%. Now let's talk about where your money is going to grow. And Tasmania isn't just the yield king, it's the growth champion for the year as well. The major banks are forecasting growth between 13 to 15% for 2025. Commonwealth Bank says 13%. ANZ is even bullish at around 14%. And we are talking about potentially doubling Sydney's growth rate. But the real story is happening in Brisbane. This city has officially joined the $1 million club. The median house price just crossing over $1 million. But before you think that ship has sailed, listen to this. Brisbane units are up 11.8% annually, and the major banks are forecasting another 6 to 8% growth through 2025. Here is why Brisbane is still a powerhouse when it comes to growth. You're looking at infrastructure. Cross River Rail is transforming the connectivity to Brisbane. The 2032 Olympics are driving massive development, and the interstate migration from Sydney and Melbourne just won't stop. When Sydney's median house price is $1.7 million and Brisbane is at $1 million, that's an extra $700,000 worth of difference for essentially the same lifestyle. Actually, a better lifestyle and better weather. I'm going to give you exact suburbs where the action is happening right now. Let's start with New South Wales. Keep your eye on Meningen Park in Sydney, which is the outer west of Sydney. This suburb has 16% growth in the first half of 2025 with a median price of $1.1 million. Now, that might sound super expensive, but remember, this is still hundreds of thousands of dollars cheaper than the established Sydney suburbs. And the infrastructure development happening out there is incredible. Everyone knows about the airport that is basically going to be coming there. Loch Inwar in Hunter Valley is another gem. 13% 14% growth, median price of $685,000. The Hunter Valley has been undervalued, and with mining activity strong and Newcastle prices pushing people further out, Loch Inwar is perfectly positioned for the growth that it deserves. Up in Queensland, if you're talking about affordability with growth, look at Morgong in the Wider Bay region. 14% growth, median price of just $375,000. And Home Hill near Townsville has seen 13% growth with a median price of around $295,000. Now, I'm not saying this that you should rush out and buy these suburbs tomorrow. You need to do your own due diligence, understand the local market, and make sure that they fit your investment strategy. But these numbers show you that opportunity exists outside the obvious choices. In South Australia, Fisherman's Bay has seen 13% growth with a median price of just $106,000. Now, that's obviously a very different market, but it shows you the diversity of opportunities that are still available in today's time. For those wanting something more established, west of Melbourne like Braybrook, Maidstone or West Footscray, or southeast of Melbourne like Cranbourne, Berwick, Pakenham, these are the suburbs that are delivering roughly around 8% growth. Be careful of, north of Frankston or Jacana, where investors are flooding the market, but these suburbs are known for its housing commission, where gentrification is still quite far from some of these areas. Now, before I continue, I want to ask you something. Are you currently investing in property, or are you just starting to think about it? And what's your biggest concern right now? Is it finding the deposit or picking the right location, or maybe you're worried about interest rates? Drop a comment below and let me know, because I read each and every single comment, and I often make videos based on the questions that you have. Your feedback literally shapes the content that I create. Also, if you're finding this useful, hit that like button. It really helps the channel, and it tells YouTube to show this video to more people who might benefit from this information. Pick one of the suburbs of the cities I mentioned today and go and research the hell out of it. Look at the recent sales, the rental data, the future infrastructure projects, the population and the diversification. Then come back and tell me in the comments what you found. Until then, be kind, keep investing, keep smiling. This is Moss checking out. Adios.